What's up, guys? What is going on? We're going to allow everyone to kind of come in and kind of get their audio correct and make sure that everyone is all set to go before we get started. But definitely appreciate having you guys here with us today. Just give us a couple of minutes here as people start to come in. In the meantime, in the chat, go ahead and put where you guys are calling from or where you guys are dialing in from, and who invited you on the call.
Let's see who we got here.
We'll see who we have.
Hi, Charity. Thanks for coming. Layden.
Greg, I see you there. What's going on, Greg? Hey, Rob. Sean, what's up?
Hi, Ginger. I see that Charity brought you on. Nice to have you.
Guys, don't mind me. I'm going to be sipping my tea. I'm having some throat difficulties today. But wonderful to have every single one of you here with us.
Hi, D'Amico. Oh, we've got Gastonia, North Carolina. Got Long Island, New York.
Long Island, okay.
All right, where else do we have? We've got Bronx, New York.
Love it, love it, love it. All righty. All right, so guys, without further ado, we're gonna go ahead and get started. Again, thank you for taking your time to spend your night with us. We won't hold you too long. It'll be about an hour, about 30 to 45 minutes. I'm going through the deck, and we'll leave about 15 minutes for questions. First and foremost, I'm Yannick Matthews, co-founder and managing partner of Jewelstone Capital Partners. Again, we're so thankful to be able to share this investment opportunity and grateful for the relationships we've been able to build here in the Florida market with brokers, property managers, investors like yourself. It's through these deeper relationships that we have found this gem, Orlando Sky. So just a little bit of a backstory on this property. We were interviewing a property management company for a similar style property that was here in our backyard. And they went ahead and told us, hey, look, there's another property that is in, closer to the Orlando downtown area, very similar to this property. It's about an hour away from where we are now. A little bit of a story about that owner is that, they were exploring selling that property because, they just weren't able to execute on the business plan the way that they intended to. More of a kind of a smaller ownership team. And we've seen a great opportunity for us to jump in, save the day, and add significant value to Orlando Sky. And so that's why you guys are here. We went ahead and took action and made sure that we were able to secure the property and take those next steps. So without further ado, I'll go ahead and kind of start some of the housekeeping, if you will. Go ahead, Marish, go to the next screen. Yeah, so this is a 506B offering, but before we go into details on the property, the information contained in the presentation is considered confidential and is solely for the use of prospective investors to determine the level of interest in the Orlando Sky property in Florida. The opportunity to participate is open to both accredited and sophisticated investors, while the information contained in this presentation has been compiled from sources we believe to be reliable. Neither the sponsors nor the representatives make any representations or warranties as to the accuracy and completeness of the information contained herein.
More disclosures.
More disclosures, guys, but we'll be quick. All financial information and projections are provided for reference only and are based on assumptions relating to the general economy, market conditions, and other factors beyond our control. The investment is illiquid, and only those persons that are able and willing to risk their investment should participate. Like any investment, guys, there's risk involved. All right, guys. So really quickly, I did say at the top of the call, it's been about an hour call. Be about 30 to 45 minutes going through the deck, just kind of depending on some of the questions that you guys may have. Then we'll
So
leave
put
about,
them in the Q&A.
yeah, put those in the Q&A. We may not see them if they're in just the chat, so put them in the Q&A. And if we see them, we'll be able to answer those in real time. If not, we'll answer some of those at the end. But just a brief overview. What we'll do is we'll go through some of the highlights of the property, the investment returns and projections. Obviously, we'll talk about the Orlando market and why we're so excited about this market. And then we'll talk about next steps, okay? So guys, important to know that the strength of the leadership team and their effectiveness as operators to drive the business plan and meet targets is key. So the lead sponsors for Orlando Sky is a multifamily capital partners with Tyler Devereaux and Ryan Woolley. MSCP manages over 3,700 units with values over $390 million spanning over 5 states. Together, they also own Multifamily Mindset, education company providing new and seasoned investors the insight to be able to expand in their market. Joining us today, we have one of the co-sponsors, Ryan Woolley, with us. He leads the managing team. Ryan, did you want to say some words to the investors today?
First of all, it's great to be on here with you guys. You know, it's been a pleasure knowing you and seeing just the professionalism, not more important than deals, you know, that you guys brought. I mean, this deal fits exactly the criteria that we're looking for in deals. You know, you saw, I think on the next slide, you know, our track record. You know, our average, you know, annual rate of return is you know, roughly 37%. And it's because of deals like this. You know, I'm sure we're going to be going over it throughout the process tonight, but, you know, being $300 under market rents and being able to capitalize on deals like that where they've been mismanaged allows us to have a track record, you know, of the 37%. So we're just extremely grateful of you guys thinking of us and bringing us on this deal with you guys. So super excited, you know, for what the next 3 to 5 years brings.
Absolutely. We're appreciative to have you.
So I will actually take over here and go into a little bit of the investment highlights. So this section really is more of, you know, the highlights of the deal. We know some of you are already seasoned investors. You may have invested with us before on other deals. So I know for you guys, you just want to know all of the quick tidbits and important information. So that's what I'm going to cover here. I've gone ahead and put in the actual chat the portal so that when you're ready to go ahead and go in and complete your documents, they're already uploaded in there. Feel free to go ahead and click on and get the information, but I'll give the investment highlights here. So Orlando Sky Apartments, it's 140 units, just minutes from downtown Orlando, nestled in a mature Northwest residential neighborhood. Florida is really such a highly desirable area. The Orlando MSA has continued to expand, creating a demand for properties where other buyers are willing to even overpay to start creating a footprint in the area. But thankfully, I know you've heard it already twice, but we do have the relationships that we've quickly built here when we came into the local market. And that's how we were able to come across Orlando Sky. Those sellers were looking for a really strong operating team that had a successful track record and a leadership team that was going to get them to close, right? As well as perform. Price is always very important to them, but, you know, for any seller, but also the track record was probably the biggest driver in the decision. That combination was the key factor that enabled us to negotiate a purchase price of $15.7 million, which is below market price. That allows our investors to choose between 6% or 8% preferred returns, depending on the initial capital investment they choose. The projected annual returns are estimated to be 18%. And in the 18% range, which will be paid in 2 ways, right? You'll have the cash flow, which will be paid throughout the whole period. And then the second way will be from proceeds from the equity once we exit or sell the property. We'll break into some of that more specifically later. For this property, we'll be raising $7 million. Operators will be personally guaranteeing the loan, which means our capital will be invested right alongside with yours. We know that's important to you as it is also important to us. So let's
Marisol, if I can interject there really quick, I think it's important to notate here is, one of the most attractive things in the price is what you said is, it's under what the market is, right? The seller wanted to sell this for $17.2 million, and we're picking it up for 15.7. I know a lot of people right now are asking in the market is, what are you seeing, right? Like with the market. Well, you look at that's a $1.5 million instant equity that we'll have when we go to sell, right? So, you think about this, picking it up this price is so attractive as an investor. We're constantly passively investing in other deals as well. But to see a deal like this, we're putting money into this deal as well. So, right, instant, I want you to think about that. Those on the call, right, is 1.5 million in instant equity right there.
Yeah, and we are super excited about that. So looking at some of the highlights and the timelines, this investment is currently open to accredited and unaccredited investors. Preferred returns are 6% or 8%, depending on the initial investment amount. The minimum investment amount is $100,000, and we'll be receiving the 6% preferred returns. For those investing $2 million or more, those investors will receive 8% preferred returns. Funds are due by November 22nd. Investors will be accepted on a first come, first served basis, and the distributions will be paid quarterly beginning the third quarter after closing. Because we are looking at that we are looking at third quarter closing. We'll catch up as needed as soon as we can. So just to review some of the highlights of the terms of the deals, debt terms are something that is very important to us when we are looking at multifamily. Debt remains to still look very attractive, right? We believe that people are actually going to look back at this current lending environment and maybe say, I missed out on once in a lifetime opportunity to build generational wealth. Leveraging our lending connections and our track record, we were able to source a 3-year interest-only bridge loan.
Hey, Marcus, do we have, are you on right now?
Yeah, I'm on right now. It looks like they're paused, unfortunately.
Awesome. Hey, so we can take over really quick on this temporarily until they gain or until they come back. But we're doing a bridge loan on this one. It's fixed rate. Super important. A lot of people ask on a bridge loan, on variable rates, we're very cautious in today's market, right? You see with the Federal Reserve and what's happening with the Federal Reserve. Do we still have everyone on, Marcus?
Yeah, we still have everyone, I believe.
All right, if you're there, you go ahead and put in the chat. You guys are still on? Perfect, cost segregation, awesome. So we are going into a bridge down. This is a fixed debt. That's one of the things I love on this property is, anytime we see variable rates and adjustable rates, MF Capital Partners, very concerned with the types of lending that we have on the properties that we get into. And so for us, not being certain with where the market's at today, we want to make sure that we get into a loan that is fixed. More importantly, in the next 2 years, are we able to refinance it and get into a better rate? We're very confident in potentially 2024, 2025, that those rates will start coming back down. We want to be able to refinance that. So one of the biggest things with MF Capital Partners is we like to forecast. We don't believe in taking where we're at today. We like to look in the future. Where are we at today? Where are we at next year? Really in the second, third year. When we say holding for 3 to 5 years, we believe in 3 phases, right? We believe in stabilizing an asset, right? One of the things we're going to do with Orlando Sky is stabilize it over the next 6 to 10 months. Once that's stabilized, I like to call it phase 2. I'm a big time golfer, Marcus. I'm not sure if you are. If you come out here, I'm a golfer. That second phase, we like to call it moving day, or we like to, add the value add in there. And so that's what we're really going to be doing from that, from that 10-month mark to about the 18-month mark. And at that time, at the 18-month mark, we'll look at refinancing or potentially selling on it. So, that's what we love about that, where Marisol was going into the loan, right? Into the bridge debt part of it, is making sure that we have those options We passively invest in deals as well. Those are the questions we would ask in deals that we invest in. So we want to make sure those are there for you as well. More importantly, in a deal like this, it was mismanaged. The improvements were at $7,250 per unit. Want to make sure we fix them up. A lot of these properties, it's built in 83, right? Marichelle? I could be off. Maybe it's 85. So 85. When she went over the track record earlier, it's like keeping everything in line. It's 400 million. Sometimes I remember the first deals that we did so well, but making sure that we're upgrading these units to be able to achieve the rents that we want to achieve. And so that's where you're seeing on the improvements at 7,250 units. Make sure they're nice, right? We believe in community. We believe in fixing these up. And we know that we'll be able to achieve the rents that we want just at market by fixing some of these units up. So Marichelle, I'll let you take back over. But,
Awesome.
hopefully I didn't ruin it.
All right, so let's go on. And so we understand, right? One of the ways to mitigate risk is to really understand market trends. There are four main influencers that shape where people live, what they buy, and that's government, it's economy, it's technology, and society. So we love where the Orlando market is going, right? From a governmental perspective, Florida has no state income tax, where the US average is 4.6%, and its tax system actually ranks fourth in this year's state business tax climate. Orlando itself is the fourth largest city in all of Florida. The economy continues to show job growth increases over the last year, while unemployment is lesser than the national average. So 122,000 jobs added year over year as of June. The metro area has 13.4 billion in technology industry, employing over 53,000. And it's nationally recognized cluster of innovation in digital media, agriculture, technology, aerospace, software design. So all of the fastest, highest growing tech sectors in the US is here in Orlando. Greenworks is another thing that's continuing efforts to guide Orlando on the course towards long-term sustainability. And then lastly, right, the social influence places. Florida, #1 in higher education. It's #1 in entertainment and recreational facilities. It's also the #2 most diverse place to live. So again, these are some of the factors that influence us in choosing to invest in a market, and Orlando just kind of continues to get us excited about it.
Oh, yeah.
And so this is a good breakdown. This breakdown is a quick snapshot of what the projected returns for the lower tier investor will look like. This is for the $100,000 initial investment. It'll take us first quarter to start getting rents to where we need them to get. So the 6% preferred returns will provide that cash flow over the 5 years to about $30,000. When we sell the property, you'll receive your initial capital of $100,000 and the projected equity of $60,000. That turns that $100,000 to a final projected investment value of $190,000. We do not take our projections lightly, though we are very optimistic. We are also very conservative. And one thing to note on this slide is that we are looking at the preferred returns at 6,000 or 6% annually for the 5 years. We know that because we do have to take that time to get the rents caught up and also stabilize the property. We may have to catch up some of those preferred payments for you guys. So what's going on? So when we do, we'll catch that up as soon as we can. We're hoping to be able to do it as early as maybe year 2 or 3 if possible.
If I can interject really quick, when you say we're conservative, is we always have a lot of investors ask, what does that exactly mean? And let me tell you about the Central Florida market right now is, market rent growth is some of the strongest in the country. It was recently at 24%, just dipped down to 18%. In our underwriting, Rashad and I were just extremely conservative, right? Tyler always laughs. My business partner, Tyler, lives in Maui, and he just laughs. He's like, man, you're just almost too conservative. He'd tell you, I probably wouldn't have done a deal yet because I pick apart everything, but where it's 18% here in Orlando and market rent growth still, our highest that we projected was 6%, only 6%. You see a lot of other operators out there that will take it to 12, 15, 16% to get higher numbers and higher returns. Well, what happens when the market dips and it continues to dip? right? They have to they have to perform at such a high level to hit those numbers. To where for us, at a third of what it's at right now is what we've projected it at. So, Marisha, when you say conservative, it's almost, extra conservative, and we prefer it that way, right? Under promise, over deliver.
Right.
Every time. So these are pretty much most of the investment highlights. So if this is all you came for was the good nitty gritty kind of top of the subject over the underline, then this would be a good opportunity for you guys to go ahead and jump in the chat and click on the investor portal to go through that. We're going to actually stay in here for the long haul, and we're going to go through a little bit more of a deeper dive into the investment and the overview of the investment, and we'll break down the numbers a little bit deeper for you guys. So this is your first look at Orlando Sky and the current unit. We are going to go ahead and show that this property has a pretty decent unit mix. The property was constructed in 1985, 140 units over 17 one-story buildings. They are Cardinal Construction Garden apartments, which is actually very commonly found here in Florida. 34 studios, averaging 288 square feet. There's 96 one bedrooms, one bath, and they are about 576 square feet. There's 5 2-bedroom one baths and 5 2-bedroom 2 baths, which are 864 square feet. These cozy apartments are in demand for working singles and small families. The seller did maintain the property well, but did very minimal upgrades, leaving a significant amount of value add opportunity for us to really execute a meaningful, strategy to increase the rent revenue. The property is currently at 96% occupancy and is $300 on average below the market rents, which we will review deeper in the comparables later. So the community itself does have laundry facilities on site and on-call maintenance. There's a full-time on-site leasing office and business center for the residents. Multiple walking trails are available throughout the property. Each unit has its own private patio or porch. There's more than ample enough parking throughout. The unit features have high-speed internet access, P-TEC heating and air conditioning units, and something unique, which is something we haven't seen before in these Cardinal builds, but they have attic storage. The larger units, the 1 and 2 bedrooms, do have washer dryer connects already, hookups. So, and most of the units have carpet flooring now. So again, this gives us a lot of significant opportunity to add value upgrades to create that premium or modern unit, which Marcus will go into here a little bit later. So deeper dive into the actual location, right? When we say Orlando, it is quite massive. So let's really take a deeper dive into the location of where this property is in Orlando and the influence that can have on the tenant base. So this map just gives you an idea geographically of where Orlando Sky is positioned relative to downtown. We're northwest about 10 to 15 minutes. It's surrounded by, popular lifestyle and retail drivers. The location has a wide selection of retail, dining, is close by. You've got excellent access to Orlando's largest employers. You've got pharmacies and groceries, fast food, or sit down, as well as like banks and a lot of business parks, right? Even with the access to existing hotspots, there's just still so much development that continues to happen here in Orlando, which is one of the reasons, again, we just love this market. So one of those developments is just a mile away, the RoseArt District. This is a $1 billion mixed-use project that's aiming to redevelop the former Lake Orlando Golf Club to create a pedestrian-friendly neighborhood town center, like abundant with green space. It's going to have Class A retail, office space, and really high-end residences. The RoseArt District aims to be like a premier live, work, play destination for the region. In addition to creating jobs and of course, boosting property values, the project has also had an emphasis on sustainability. That definitely will provide us more attractive residents who will frequent these attractions, right? Also nearby coming is the new Packing District. This is a wonderful 202-acre, $700 million transformation project. It's at the intersection of Princeton Street and Orange Blossom. In Orlando, it's really focused on preserving and recapturing and defining, part of the community's history. They're actually going to preserve some of the historic buildings and repurpose them for uses like dedicated public spaces, urban trails. They're going to have 100-acre public park that's going to be gifted to the city of Orlando. It's dedicating a lot of its land to health and wellness, education, arts, community. It's also going to have like a 39-acre public park. They're going to coin it a city park at the packing district. There's also going to be Four Roots, which is like a charitable arm of Four Rivers Smokehouse, which is a barbecue chain. They're actually going to be having an urban farm that's like an 18-acre farm. They're going to build greenhouses, classrooms, farm to table cafes. I think we've already been told that Publix, rumor has it, might be coming to this location. But, you know, again, just more boost to the local economy and the property value, and great positioning for us at Orlando Sky. So I'm going to go ahead and turn it over to Marcus, who is going to give you some better look into the property itself.
Awesome. Thanks, Shell, for that. And everybody, you can see why we're so excited about this opportunity here at Orlando Sky. Again, my name is Marcus Turner, and I'm going to spend a little bit of time here talking about our asset and, you know, what our plan is to take advantage of the upside in this market, what we're going to do to systematically, you know, handle the deferred maintenance here at the property and ultimately increase the overall value of this property so that the returns flow back to you all, the investors. For this project, we're going to be teaming up with AMC as our property management company. AMC is a premier property management company. You know, they currently manage over 130,000 units across 30 states, and they got 35 of those properties located right here in the Florida market. So they're definitely very knowledgeable in what they do. Unlike a lot of property management companies that are primarily focused on running the operations and trying to keep the operation and occupancy levels up, AMC further incentivizes themselves to also drive the revenue higher. On average, AMC performed about 2.6% above their pro forma projections for the properties they managed last year. So this is obviously exactly what we want. AMC was present on site with us during the due diligence inspection. They walked each and every unit with us. And if you go on to the next slide, we identified a few projects during this due diligence inspection that we're going to want to address in order to increase the overall curb appeal of this property. So for the exterior, the paint definitely needs a refresh. So we're going to use this opportunity to move away from the blue paint scheme they've got going on here and update it with something that's a little bit more modern. We're also going to power wash the sidings on each of the buildings so that the entire community gives off a nice, fresh, renovated look to it. We're going to rebrand this property while we're at it. I'm going to add some new signage, a new name for the property. What we want to do is we really want to tie this property in with the path of progress revitalization that's happening in the nearby RoseArt District. So we'll come up with a new creative name for this property that allows us to play on that. For the landscaping, you know, one of the great things about this property is that it has a ton of wide open green spaces, you know, mature trees, mature landscaping. It really gives off a nice, quiet community vibe to our property. But at the same time, some of those trees do pose a potential risk to us. If you look at the picture here in the background, you can actually see, you know, some of those trees are growing far too closely to our buildings. And in some cases, the limbs are growing over the roof. So one of the first projects that we're going to do is to be trimming back some of these trees, you know, maybe even removing them in locations where we have to, and replanting those trees a little bit further away from the building so that we maintain that foliage in our property long term. We spent some time here at the property at night as well, just kind of observing what was going on. And there was really nothing notable, but we did notice there are definitely some dark areas on the property, especially on the extremities. And what we want to do is we really want to create a property where the community and the residents feel safe and secure coming back to really at any hour of the night. So we'll be adding some additional lighting throughout the property to help ensure that. We're going to also be repaving this parking lot to refresh it and take care of any of the damaged areas, again, just to give us a nice renovated and fresh look to the property. And we're also going to be installing gutters on all the roofs. Some of the buildings have gutters right now, some of them do not. Of the ones that do have gutters, they're all clogged up right now. So we're going to be implementing a maintenance plan to, you know, periodically check the new gutters and make sure that they remain free of debris so that we don't get any soil erosion around our property. Looks like we lost Shell in them again, unfortunately, but I can continue to speak about our interior plan while we wait for them to get back on.
Marcus, really quick, I think it's important to know before we move completely past AMC is You know, one thing I love about AMC is they're always above pro forma. You know, meaning, you know, I talked, you know, briefly a little bit, you know, market rent growth, you know, where we're at 6%. So a third of what the market rent growth is in the Orlando market. You know, last year, AMC did a little, I believe it was 2.8% above pro forma, right? 2.8% is huge, right? Over all the properties that they see, they still were 2.8%. So even though we're conservative, this management company does even better than what we project. So I think it's important to notate that as well. Sorry,
Awesome. So I shorted him a bit. I had him at 2.6. No, not at all, not at all. So 2.8, even better than I said. Yeah, definitely that's awesome news for us and what the potential is on this property. You know, in the absence of slides, I can just talk a little bit more about the interior plan that we're going to be doing. You know, each of the units right now is in a pretty much, you know, identical state to what they were originally. I like to call them vintage. Some call them classic units. There's very minimal upgrades to the interiors of the units right now. Some units do have upgraded flooring. Some units do have resurfaced cabinets, things like that. But all in all, there's still a ton of value add left to be captured for us in each of these units. So, you know, what our plan is going to be, we're going to really be making light adjustments to the interiors of the units. So that'll consist of new paint for each of the units. We'll also be replacing the flooring in areas where we can't reuse the carpet. Each of these units right now, it does have what they call a PTAC. It's a package terminal air conditioner. It's a wall-mounted AC unit. Some of the units that have these, either the PTACs don't work or they only half work. So that's required a lot of the tenants to either have to go out and purchase their own AC, wall-mounted AC units to install on the units in order to get adequate cooling during the summer months. And that's obviously not what we want. It's a tough sell trying to tell a tenant that you're going to bump their rent all the way up to market rent when they have to go out and supply their own air conditioning. So that's something we're definitely going to handle and handle all those maintenance requests and really make this a nice community for all the tenants to live in. For the kitchen remodels, you know, what we want to do is really do light remodels. We will create a few premium units in the property that come with things like, you know, upgraded new countertops and new cabinets, microwaves above the stoves, you know, backsplashes, things like that, that are able to command top market rent. But we're only going to do a few of those. That's really just what we want to do, is to show the next investor that there's still a lot of what they call meat on the bone for them and what they could do with the property when it's time for them to take over and project out what they could do in the future if they converted over a few more of those our units in the property to premium units. But again, for the most part, you know, our renovations are going to be light in the kitchens. It'll consist of, you know, painting the cabinets white, you know, adding things like knobs and handles to the doors and drawers, and improving the lighting above the kitchens, replacing the sink faucets, things like that as necessary as we turn the units to new tenants. But we'll also handle the bathroom renovations in a very similar way. We're replacing the faucets, the shower heads, resurfacing the bathtubs, things like that as needed as we turn these units over to new tenants and then bump up the rents to market rent at the same time. We also noticed on the property, there are also a good number of damaged blinds throughout the property. So we'll be replacing those case by case and also just staying on top of charging tenants moving forward if they continue to damage things inside of the units. I think that pretty much handles it for what we're planning on doing on the inside there.
Awesome. Hey, so what we can do is open it up to some questions right now as Marichelle and Yannick hop back on. Just want to know if we have any questions. I know one of the questions that came in to me personally was cost segregation. You know, one of the most important things as an investor is knowing what your depreciation you know, could be on a potential investment. So we've already set up the cost segregation to be done immediately after closing. So it's done for the 2022 year. So for those of you looking to invest and are looking, you know, for some assets or some investments that do depreciate your passive income, we will be doing those. Now, a lot of questions are, you know, what should that be on, you know, the $100,000? You know, those studies range anywhere from 30% all the way up to 70%. So meaning if you invest $100,000, you could see anywhere from $30,000 to $70,000 in depreciation. And so until we get that study done, we won't know the exact number, but once we do that, we can release that study to you. so that you can give that to your accountants. That's one thing that as we invest, we're always in for opportunities to get that. So would love to open the chat if y'all have any questions, so we can answer those right now on the property. Awesome. Any questions? I'm not sure if we're able to get Rashab in here. Do you have control over it? Yeah, definitely is more
Let's
inland.
see if I have control. I don't.
A question on, is the property more inland? Yeah, we're not really close. Although one thing I love about Orlando, I actually live 15 minutes from the property, which is great, right? It's MF Capital Partners' first deal in the Florida market. So we're extremely excited about that. But we're definitely inland. The question that Ginger asked was it affected by Hurricane Ian? You know, we really didn't get big winds, 60-mile-an-hour winds. Some of you may seem like 60-mile-an-hour winds is big. You know, I know Marcus, you live in California. I'll take the high winds and hurricane over earthquakes any day. You know, I'm actually born and raised in Fresno, California, so I get it. But yeah, it really wasn't affected by the hurricane that came through. Some tree limbs that you know, came down, but no damage to the building at all. So we're looking.
Sorry about that, guys.
You're all right.
Yeah, we're having some windy night over here. I don't know what's going on with our internet.
Yeah. So Juan, I would love to know more about that. You know, 1031. You know, I would say talk to you know, one of your tax professionals on that. But what we've experienced in the past is 1031 is this. I'll briefly explain this. We don't know if 1031s are going to be there in the future. We don't know if it's going to go up to 40%, if it's long-term, short-term, you know, so we want to make sure that we're aware of that. I'm not sure what your 1031 is. If you want to shoot me a private message really quick, I can go over that a little bit more. You know, some people get 300,000, 400,000, 500,000 capital gains they're looking to offset. This is the last year that bonus depreciation will be 100%. That came back from Donald Trump's time. You know, and so it's some of the tax benefits we're able to have on this property, to where if it's a 1031, and it's 400,000 or 500,000, even $1 million, you're able to realize those that offset immediately, right? You know, so I don't know what the cost basis is on the property that you would be doing a 1031 on, and a lot of that, like I said, you'd want to go to your CPA on to see how it affects you. The benefit of doing a cost segregation is we realize that offset immediately, right? Where a 1031 could be 3, 4, 5 years from now. Like I said, we don't know. You know, by one of the things that Biden's administration has tried to do is to eliminate 1031s. In the talks, you know, that they've had over the years is that 1031s could go away potentially. You know, there's a theory that you know, that you know, the government is losing out on you know, on taxes because of 1031s, and I don't necessarily agree with that. Neither do a lot of my colleagues, but you know, cost segregation is something that we could realize today. So we had someone who did want to do a 1031. It's $2.5 million. You know, they put it in into one of our deals in Texas, and it completely wiped out all their capital gains that they would have had. You know, so depending on where you're at, they were, you know, late 60s. They wanted to give that you know, that money, you know, down to their kids. You know, it was going to be oh man, it's late at night here. My kids are screaming in the other room. It was going to be an inheritance. And so they wanted to get, Marcus, you know, you got 2 little ones. You know how it is when the kids start screaming, huh? You know, it's a great thing and a bad time. So the inheritance, you know, they wanted to be able to give to their kids without assuming, really was after a 20-year period, without assuming all this capital gains, right? Because if it went to 40%, that's a lot. You know, so they were able to do that. So I would say get with your CPA and talk about that, or schedule some time with one of us. We can hop on a call and I can go over that further with you. Hopefully that answered that question. Oh, they're frozen again. I'm going to answer this. David, you had a question. What's the historic occupancy historically? It's very high on this property. One of the things we really love is David is finding properties where they haven't fixed up the interior units, like Marcus was talking about. You know, I mean, here's the thing: we want to go in and we want to be able to fix up these units. You know, typically, like you know, previous owners, you know, they come in and they manage it. They have different philosophies. They want higher higher occupancy, which means they're not driving the rents. You know, David, we're at $900 in market rents right now on this property, and in the market it's at $1,200, right? Not only $1,200, you know, around that area, especially with the property coming in here at $1 billion there, it's a Class A property, but we're able to keep up with that. We're able to drive up rents, you know, where they are developing around this property. And so we don't want a high occupancy. We want to be able to drive rents up and have a healthy vacancy, right? That's really what we want. Now, when are the funds due by, Cindy? Great question. Yeah, I know originally it was 11/22, but because of the holiday, I believe we're pushing it out to 12/7. You know, it makes it very hard for some of you to wire over first thing tomorrow. We would love for the urgency to be there, but you know, I believe we are going to take it out to 12/7. Is that right, Marcus? Right around there would give time for the holiday. 11/22.
Yeah, that's correct. 11/22 is when the funds are, yeah.
Yeah, I'll let you answer this, Marcus. Cindy has, this is all, is this for accredited or non-accredited right now?
So right now, this is open for accredited and non-accredited investors. We are 506B currently right now. So definitely get those funds in as quickly as possible. We were considering opening this up to a 506C later on, which will be accredited only, but at this point in time, it is open to both.
Perfect, great question. Let me pop open. Good deal. Any other questions at all? You can put it in the chat. You can ask it in the Q&A, whatever you would prefer. I was actually clicking on the wrong one, Marcus. I have both screens up. You know, one thing as an underwriter, I have multiple screens, you know, so I'm flipping back and forth. My chat was jumping in on the other monitor. Awesome, Juan. Yeah, Juan, let me ask you, who do you know, Juan, on the panel? Who is it that you were talking to? I just want to make sure that we can hop on a call if you need to, unless that clarified your 1031 question. Awesome. That way I know who to follow up with, make sure we can take care of that for you and answer any further questions you might have. So I want to go over this really quick. You know, I was thinking about this property today, Orlando Sky, and I want to give you some comparisons, right? We did a property that at the beginning of COVID, right? You know, it was a property in South Carolina. You know, we had a lot of success in Columbia, South Carolina. And right at the beginning of COVID, we purchased a property. I remember a lot of investors were like, hey, man, look, it's COVID. I really want to see what's going on. You can't bump up rents right now, right? There's a moratorium there. You know, what are we going to do? And I think a lot of you probably see this as well, right? You see the recession, a potential, I don't care, government might call it a recession. I call it a recession, right? You know, it's 2 quarters GDP being negative, right? So, you know, we'll call it a recession, right? A lot of investors go, man, is it the right time to invest? You know, I look at this, you know, we go back to the 70s, we can go back to the, you know, 80, 89, 97, we can go to 2008. Those are all times that the market dipped, right? You know, the market dipped. And what happened over the next 2 or 3 years? The market went up, people made money. So we had a property at the beginning of COVID that we purchased for $7.5 million. And we had a lot of investors say, hey, no, I'm gonna pass on this property. You know, it's so funny, Marcus, though, you know, America, good day, I see you back. So, you know, we had a property, it was $300 under market rent, just like Orlando Sky, exactly like Orlando Sky, okay? You know, and the property we sold it, we held on to it for 18 months, right? 18 months, and it was a 52% ARR. It was like, it was 76% is what we had over 18 months. $300 under market rent, when you think about that. You put that and you take the 1.5 million that we were able to negotiate, right? You know, Marichelle, Rashab, Yana, you guys killed it on the negotiations on this, right? Of getting it down 1.5 million. So I want you to think about this: 1.5 million in instant equity, being $300 under market, you know, under market rents, right? You know, and being able to, you know, achieve that. Right? We truly believe that in a 12 to 18 month period, we'll be able to make up that difference, right? And be aggressive at getting to market rents. What's that mean to you guys? Right? That's approximately $3 million in equity that we'll be able to achieve in an 18 month to 24 month period of time, right? So I wanted to draw that comparison of a property that we had very similar in a very similar time. COVID, right? We had moratoriums. You couldn't raise rents during those times. I mean, you could raise rents, But right, people didn't have to pay rent. If they said COVID, boom, done, you couldn't collect on it, right? And so it was interesting as a group today, we were talking about that deal in Orlando Sky and just how excited we are. We're putting $2 million in, from MF Capital Partners. $2 million is what we're bringing in from our fund into this deal. That's how much we believe in the deal, is because anytime you find deals like that, you don't see deals like that this far under market rent, plus being able to drop the purchase price as much as we did. So I want you guys to think about that and know that information as you're making decisions to invest with us. Awesome. Marichelle and Yannick, it's all you guys answering questions.
Well, I can definitely share, kind of a little bit of context to what you were just talking about, Ryan. We do have a comparable slide with, some of the market comparables. Just like Ryan said, this property itself has direct comparables, Orlando Terrace and Kensington Villas with also Cardinal construction units, right? So they're the same builder as Orlando Sky. It's a signature design here in Florida. There's two properties just 10 minutes south and southwest of them. And as you can already see here, the rents are higher, over $300 higher currently today than our Orlando Sky. So there's just a huge upside that gets us really excited about this property. What other questions do we have? Anybody else? No? What else? Do you want to talk a little bit, Yannick, about the market and kind of just a little bit more about, what's going on in the area?
Absolutely. So guys, obviously you heard many of us talk about how excited we are about the market, right? I definitely want to jump into some of the market details and why, one, we love Orlando and the Orlando market. It hits all of the major indicators for us, right? There's robust job and employment growth. Close proximity to all major employment centers where Orlando Sky is actually sitting. We're surrounded obviously by lifestyle and retail drivers, right? And I mean, that's just absolutely key for us when it comes to, our people being able to live, work, and play where they live, right? Demographic trends extremely favorable, right, in apartment investing, especially when we talk about this region and we're experiencing this net migration. And also that's what we're doing here, right? We're helping new and seasoned investors crack into this market, right, into the Orlando market. Now, from a population standpoint, we like cities that have over 100,000 in population, and obviously this checks those boxes. Also, the median age is 36, right in that cusp of apartment renting age demographic. Average household 2.9 with a median income of about 45,000, which is obviously still also right in line with those demographics. Orlando is obviously a primary market. I don't know if there's anyone on this call that's never been to Orlando, right? There's so much going on here. It has over 2.5 million residents, low unemployment rates, very high job growth, with the current rent growth increase that Ryan mentioned a little earlier, about 18%. So you can see that the average gross rents are closer also to about $1,800. I'll show a little bit more if you go to the next slide.
Yeah, absolutely.
Yeah. And also, obviously, guys, look, a top U.S. travel destination, right? Not only for the mild year-round weather, but also due to major events, convention traffic. Orange County Convention Center, I don't know if you guys know, it's the second largest convention center in the U.S., right? Disney World obviously being the #1 most visited theme park in the world, and resulting in Orlando being the #1 tourist destination in the United States. And great part about the market here in Florida and Orlando is that it's landlord friendly, guys, and we always love that.
We do. Awesome.
So it's also very key to note when it comes to Orlando Sky is excellent access to all the largest employers. We're minutes from downtown Orlando, not far from the Winter Park office market, Obviously, Orlando Dream Parks that I mentioned, and as well as the Maitland office market. And as you see there, how many people are employed in these very key locations around Orlando that we are very close proximity to with this property.
Yeah, absolutely.
To get a real better understanding of kind of the value potential that we look at when it comes to rent comparable in the area, to give you a better an idea, an apartment complex functions like a true operating business. The value is determined by cash flow profits of the asset. So understanding the market and identifying how above or below the market is very important. And it's, factors that we look at, and Ryan definitely went into some detail about that. But obviously we look at the asset vintage, grade of the property. So we grade Orlando Sky a C property in up and coming C+ area. It's right outside, but accessible to I-4, which is the main highway here, with close proximity to nearby shopping and parks, and what Marichelle has went through a little bit earlier about new developments.
What questions do you guys have? Let's see. I think we've gotten most of the questions in the Q&A. Anything coming up in the chat that you see?
I don't see anything here.
Cool. So far, so good. I mean, we can definitely go back over.
So Ryan, is there anything? I mean, you're not far from Orlando Sky. What are some of the things that you're seeing here, just like in a projection of the next 3 to 5 years? There's so many things that we're excited about, but we'd love to hear your insight. Is some, what's to come in this area?
Yeah, I want to draw a comparison to Atlanta, right? Atlanta about 3-4 years ago did a complete revitalization of the Northwest region, right? There was a lot of there's just a lot of crime up in the area. A lot of homeless activity in the Northwest area is close to downtown. The city got together and they put a ton of money in revitalizing that area. What's that mean for us? When the city puts money into it, it knows that we want to invest, right? So just like you talked about, the new apartment complex coming in there, right? The new buildings, the 37 acres coming in, right? Of building parks, where you're starting to see that Orlando is putting a lot of money into the outskirts. Why? Because people live there and they commute into that area, So we're about 10 minutes or so from downtown Orlando. One of the biggest things I see is when I look at the unit mix of what we get is largely being 1 bedroom, 1 bath. So I want to ask is like, what is my demographics there? Are we talking married couples, families, single individuals? We're looking at a lot of single elderly people that move there. They need to live in a 1 bedroom, 1 bath because that's what they can afford, right? More importantly, it's a commutable area. And so what I love that you just showed is most of that stuff you showed is about, within a 10-minute radius of that area. So that's what I love to see. We talk about, there's a lot of business coming into the Florida market right now, right? I don't care what political stance you have. DeSantis has brought a lot of business in here. Why? Because of how they handled COVID, and continue to run. Why is that important? It's businesses coming in here, it's job growth. It doesn't matter. Politics plays a part in investments in real estate. It does, but that's really the rules that they set and what we can do, And so I look at like Citadel, which is a $1 billion hedge fund company out of Chicago that just moved their business here. And you're starting to see a lot more businesses move into the Florida market. And so that's what I love is Orlando will not hit the same as what it did in 2008. It won't affect us as much. Why? Because we learned from the past and we fixed a lot of those issues of what's going on. More importantly, because of how we handled ourselves during the COVID crisis, still have businesses come in here, which is exactly why, you want to invest in the Florida market right now, right? Population growth is going up, like you said, Yannick, right? Job growth is continuing to go up. And that's what results in great returns, right? And like I said, our track record being 37% annual rate of return, the reason we're able to do that is because we go into the right markets, right? We invest in opportunities where they're mismanaged. That's where you make your money is where investors come in, they don't plan on their CapEx budget. And, I know that Yannick, Marichelle, Rashab, you guys are working tirelessly with Lindsay at dialing in the CapEx budget, right? Making sure that we're putting the money best at use that's going to get us the best returns, right? So I'm super excited with being in this area. Yannick, is outside of Orlando, outside of downtown areas is where you're making your money. Just like I said, the comparison to the Atlanta market, which, a lot of my friends are in that area, and a lot of my peers that have invested there killed it, absolutely just killed it in that market. And I know we're going to do it the same in Orlando.
Yeah, thank you for that, Ryan. We feel the exact same way. There's just so much opportunity right here all around us. And we are bullish in this area, to be honest with you. We are looking for everything that has an opportunity. As Ryan said, the value add is our thing. We're looking for properties that are mismanaged, undermanaged, but there's an opportunity to add value back to the community as well. Obviously that's where the dollars are going to flow. And that's where you guys are going to get the best return as well.
I got a question that came via text. How large is our cash cushion?
Great question. So I can dive into that if you want, Marisol. You want me to do it? Okay, awesome. So
Yeah.
1.1 billion is what we're gonna have in our CapEx budget, which I think is great. More importantly, we have a $500,000 budget that Marisol, Yannick, you guys in our shop negotiated, right? You guys negotiated with the seller to be able to give us a $500,000 cushion, right, for some things that we may need to fix up on the property. In addition to that, we've set aside $1.1 million, right, to be able to fix up the property the way we need it to. So I think that's a very healthy number to be able to get the returns that we need.
Absolutely.
So out of that $1 million, we calculated that $7,250 per unit in upgrades on the 140 units. So that only accounts for about 700,000-ish. And then we've got a lot of the projects that Marcus touched on. But on top of that $1 million capital expense budget, we also did get that credit for 500,000. So that opens up a lot of room for us to do other things that will create more revenue for us.
Well, guys, definitely appreciate you kind of hanging in there with us. Apologies for some of the technical difficulties that we've had. But I know that we said that we were going to be an hour, and we want to be respectful of everyone's time. I know that there may be more questions. I think what we're going to actually have, what we're probably going to do is have another call, right? So if you have any questions, and reach out to us. You'll have our contact information. If you don't know us personally, reach out to Marcus,
The Mac Brothers.
Mahad Rishab, who was invited you on the call. Go ahead and, if you could, we'll go ahead and share that last screen. If you guys are interested, definitely, jump into that investor portal. Here you also have the ability to take a look at this deck in full detail and see some of the things that you missed because we were kind of jumping on and off. So, we appreciate your time. We definitely appreciate your attention today. And we'll definitely see you guys soon. Hopefully during the ribbon cutting, everyone gets a chance to come down and cut that ribbon with us and celebrate. Drinks are on Ryan. He's already said it. So
Love it.
We're gonna hope that have a couple of rounds of golf too with them.
I love it. Thanks so much, guys, for having us on. Appreciate it.
Thanks,
Thank you, guys.
everyone.
Thanks, everyone.